Hey everyone, it's Simon here with your daily video newsletter for Thursday, the 11th of April 2024. Yesterday was CPI day, and clearly markets didn't really love what the BLS had to say. You can see here the S&P's finished down the day about at 1%. It wasn't just equities that reacted though. We saw bonds nosedive. Now you look at 10-year bonds, they got crunched, and of course the mirror image of that is yields. So if you look at US 10-year yields, they surged back above 4.5%. So the back above the kind of 4.35 key level of resistance I've been highlighting. So this uptrend is looking well and truly intact. And the dollar also surged, not surprisingly. So what was it the markets didn't like? Well, it's this trend towards reacceleration in inflation. If we look at CPI, you can see that we've got month-on-month trend towards reacceleration. Back in October, it got down to 0.1% increase month-on-month. Then November was 0.2, 0.2, 0.3, 0.4, 0.4. All right, so there was hope that this data was a blip in January. It's looking more like a trend. The trend in core inflation is looking even slightly worse. Here we're seeing 0.2, 0.3, 0.3, 0.4, 0.4, 0.4. And of course 0.4% annualizes at 4.8% per annum. More than double the Fed's 2% target. So we came into 2024 with the market expecting 7 rate cuts. Fed fund futures are now forecasting at just 2 cuts for the year, and even a 13% chance now of 0 cuts. Now, to start cutting, the Fed needs to see evidence of economic weakness and or cooler inflation readings. So far, we're seeing the opposite. Don't forget, last week we had a stronger than expected payrolls number as well. And the market is coming around to this, or kind of figuring this out. If you look at the NASDAQ has basically gone nowhere now for 7 weeks. And that is because money is kind of gently leaving tech and moving into more cyclical areas of the economy, like the industrials and the financials. Those sectors have been really, really strong. XLE has been a beneficiary as well, basic materials. And communications has actually been really strong as well. And I think really XLC and semiconductors are really the 2 sectors that are holding the NASDAQ up at the moment. If you look at things like software, that's already rolled over. If you look at things like cybersecurity, that's kind of rolling over as well. If you look at cloud computing, that's rolled over. Key implication being if inflation and the economy are going to be allowed to run hotter, it's the cyclical sectors of the stock market that will be more likely to outperform. That's what I got for you today. I hope it helps, and I'll catch you on tomorrow's newsletter. Thank you.